Hello. So the company being analyzed today is Control Prints Limited. This is an Indian company which sells printers and inks associated with printers. So it sells different types of printers. It sells inks used in those printers, provides spare and services, repair these printers and all that. And it's gotten into some new exciting businesses to fund its growth potential. So we're going to analyze this company, its financials, its balance sheet, and the industries it serves, the clients it has, its international business, and its future growth potential. So we start with the market cap, 1,238 crores. It's a small cap company. The current price of one share is 774 rupees. The book value of one share is 258 rupees. All these numbers are from screener.com, as you can see upper left corner. And these numbers are approximate, so may not be entirely accurate, but close enough. So current price of one share is way more than the book value of one share. Return on equity is a really nice 26.9%, really solid. Return on capital employed is 18.5%, really nice. And dividend yield is 1.29%. All right. This company is one of the largest printing companies in India. All right. It has a massive market share, like 20%. So taking a look at its financials, we now come to the profit and the loss. This is its profit and loss from 2014 2025. All the figures from sales to operating profit margin, operating profit margin, profit before tax, and net profit. All these figures are given. All these figures are in crores rupees. So in 2014, we had sales of 91 crores. In 2017, sales of 148 crores. In 2020, sales of 195 crores. Then 2021, 204 crores. 2023, 304 crores. Finally, 2025, 425 crores. So massive growth in sales, a very noticeable increase in sales. Operating profit margins you can see in percentages, 19% 2025, it was 32% in 2018, 24% in 2021, 24% in 2024, 19% this year. All these losses will be explained. So pretty fluctuating margin. It hit a high of like 30% in 2018, 2017-ish. And then it's been in the 24, 25%, except this year. So this year it produced a net profit after tax of 100 crores, but the profit before tax was only 67 crores. So it received a one-time, you can say, a tax refund or a negative tax. It didn't have to pay any tax. It actually received money from the government for some reasons. But 67 crores of profit before tax. All right, all right. And 100 crores, it's an inflated figure. It's an inflated figure. You should be checking that. So again, profit growth, here you can see it's in percentages. It can be misleading again because this is a one-off. This 100 crores, see this 100 crore figure, it's a one-off. But last year's, if we look at last year's, 54 crores was the actual profit after tax, 53 before. So 100, it's misleading. It should be probably around 50 something crores. So for that reason, let's not take a look at the growth profit numbers, but let's take a look at the sales profit numbers. So last 10 years, the compounded sales growth, annualized sales growth was 14%. Solid. Last 5 years, 17%. Last 3 years, 18%. And last 12 months, that is TTM, that is trailing 12 months, was 17%. Solid sales growth and seems on the higher side. Then return on equity, all right. 18%, last 10 years, 5 years, 19%. Last 3 years was 22%. And this year, of course, the return on equity will be inflated by again, which is minus 50% on my right, minus 50%. That is the tax they had to pay to actually receive money instead of paying tax. Again, one off thing. So yeah, um, last year's 27%, but still very solid, 18%. Now 22%, even 20%, really nice return on equity. All right, so these were the financials. Okay. Now, let's take a look at this company's business, the business model, the industry it is in. All right. So here we have the key notes, the key notes. So here the first thing we're going to take a look at is bunch of summary. Whoa. All right. So 21,500 plus installed base of printers installed, 34 years of experience. Okay, okay. Presence in 1,700 plus towns and cities. Now, here to my left, Make in India, the only coding and marking company who manufactures in India. Now, you may wonder what is coding and marking industry. Basically, this industry creates the technology that allows us to have essential information on products. Like you have a product, you have a product in some kind of package, right? There's a QR code written, there's a barcode written, maybe some batch numbers written. All these kind of essential information is written on the product and its packaging. The technology that is used to apply or write this info on this product and its packaging, it's this technology is created by the coding and the marking business. See, marking, creating marks, the QR codes, printing all that, the coding, again, so printers, selling printers, all that stuff is included in this coding and marking. Okay. This is the only coding and marking company in India who actually manufactures in India. All its competitors must be then, or the major competitors are international companies. 350 sales and service engineers. Here we have the credit ratings. Chrysler A1. A1 rating. This is credit rating. Short term, I think this is the highest or one of the highest you can get. And Chrysler A, this is for long term credit rating. A is the third best. I think after triple A, double A, we have A. But A is good. In the end, in a summary, A is good. These are the credit ratings given by credit rating agencies to tell the financial health of a company, estimating the credit of the company. So market share in India. Now this is important. 19 to 20% market share in India, and this 19 to 20% is a growing figure. So earlier it was 17%, 16%. Now it's 19, 20%. So it's outgrowing the industry also. So this were the key notes. Okay, 34 years of experience, or at 21,500 installed printers. All right. So now let's talk about the company itself. Now we have two businesses here. This company has two businesses. Okay, one is the India business and one is the international business. So let's read. The coding and marking industry in India today is valued at approx 2,000 to 2,200 crores, right? The industry is dominated by four key players, including Control Print, who's the only Indian company, and these players contribute to nearly 90 to 95% of the market. So 90 to 95% of market is controlled by four players, and Control Print today has an overall market share of 19 to 20%. 19 to 20%. Now, this market, the coding and marking industry, okay, it's expected to grow at 1.5 times to GDP growth. So, whatever will be the GDP growth, 1.5 times will be the growth of this industry, this market. Okay, the coding and the marking market. Now, Control Print has continued to grow at a faster pace than the overall industry and today stands at 185 crores in the Indian standalone entity. So 385 crores, I assume, is the uh, revenue coming from Indian business alone. So it's growing faster than the industry, it's outpacing the industry. That that is what that is the India business. But now, you can read in the red. Okay, steps being taken for future long-term growth to go beyond the limitations of the domestic market in a core traditional business and grow the reach of our coding and marking solutions. So India business is the traditional business, selling printers, offering repair services on these printers, selling ink on these printers, which is a major thing. Ink is a major revenue. But now they want to diversify. Okay, diversify into international, diversify into more industries, sell more complementary goods, more cross-selling to customers, and drive future growth. So here we have the international business, which is the long-term growth strategy. All right, we're gonna just have a quick read, very small quick read here. Now, Markprint and Codology. Markprint and Codology. This is, I believe, a subsidiary, an international subsidiary. Okay, Markprint and Codology. So a lot of things being said. A lot of things being said. Okay. Further, we have set up a subsidiary in the Middle East to target the coding and marking opportunities in the region from our India business as well as from Markprint and Codology. All right, so subsidiary in, oh, sorry, a subsidiary in Middle East. I'm getting sloppy. Okay, Markprint and Codology, these are two solutions they are selling, and these are the growth opportunities. Right, Markprint and Codology. Keep those in mind. Keep those in mind. So now, moving on, we come to, no, we don't come to here. Okay, all right, all right, all right. Coding and marking international business. The coding and the marking international business. Fine. So Markprint BV, okay, Markprint BV, and second is Codology UK. So Codology UK is one of the subsidiaries in the UK, is a major subsidiary of them, and Markprint BV is the other major subsidiary. Both are international. So again, Markprint and Codology is the future of the business, they say. So let's read. Markprint pushes the boundaries of traditional printing methods, provides dynamic and customizable printing solutions for various applications, providing more printing solutions, customizable, customizable. This is the Markprint thing. Then, Codology for UK is this label printing, applying solution and end of line automation systems, ensuring seamless operation for our clients. Again, complementary business for long-term growth, long-term growth. So moving on, we have the this profit and loss statement consolidated for the last few years. As you can see, 2021-2025, the revenue growth was 20%, EBITDA growth was 13%, and profit after tax growth was 34%. Again, a bit inflated because we discussed this earlier. Let's take a look at the balance sheet, the consolidated balance sheet of the company. Right here, we'll take a look at only one thing in particular, that is current liabilities. Now, this 804 is the latest figure, and these are the earlier figures, 2024, 2023. Here, all these numbers are in millions of rupees. Okay, millions of rupees. Keep that in mind. So the current liabilities are the loans, the borrowings that the company has to pay back within 1 year. Within 1 year. Very important metric. In 2025, it was 804.4 million rupees. This is the money they have to pay back or pay to others in one single year. Okay, next 12 months. Now let's compare this to current assets. Current assets. Okay. Now what are current assets? Current assets are the assets which can be converted into cash in 1 year. Okay. Current assets being more than current liabilities is a good thing. And here you can see current assets, okay, is 2,934.4 million rupees. In other current assets for fiscal year 2025, it's right below me. 2,934.4 million. Way more than that 800 point something million for current liabilities. So current liabilities is way more than current assets, and that's usually a good thing. Here you can see they have 462.4 million of this 2,900 million investments. Then trade receivables is the next big current asset, and they are a little bit less on cash. Cash and cash equivalents only 121.6 million. That's around 12.6 crore rupees. 12.6 crores. Yes, 12.6 crores seems accurate. Yeah. 91 crores is trade receivables, basically, where they have given out the product to customers on credit. So customers will pay after 30 to 60 days, some period of time. So looked at all these figures, it seems overall, current assets are dominated by investments and trade receivables. We have some amount of cash, we have some bank balance, and some other current assets. Other current assets, overall, it seems that the current ratio, that is current assets, is way more than current liabilities, and that's a good thing. That's a good thing. So let's look at the clients and the industries it serves. Okay, key clients. Key clients. Here we have the key clients of the company. Ashirwad, we got Glenmark, we got Colgate, we got Unilever, we got Cipla, we got Phenolex, okay, Indian Oil, Godrej, we got Tata, Hindalco, Britannia, Tata Steel, ITC, Jindal, Parle, big clients. Cadbury, the Goat, United Spirits, Phenolics again. All right, so big clients it is serving and the industries in which it is serving. Okay, we got agrochemical and seeds, we got automotive, we got the food, FMCG, electronics, even chemicals, steels, metals, rubbers, tires, textiles, cements. So big market. Okay, a diverse market for Control Prints Limited. So what have we discussed? We have discussed the India business, right? And then we discussed the codology and market, new businesses. Now let's discuss the future growth potential of this company. Okay, the future growth potential. Now to discuss the future growth potential, we move to yeah a three-pronged long-term growth strategy. Is their long-term growth strategy? Three steps. First, grow the reach of our coding and marking business and India and internationally. I think that's internationally and globally, yes. So one is growing the coding and the marketing business. The coding and the marketing business, the printers and all that, outpace the growth of the industry in India on existing standalone basis, grow the mark print and codology businesses in the European region, and grow the presence of our products from an international business into India. These products have now come to India and we have started selling them in India. All right, so growing the Indian business, okay, growing the Indian business and growing the European region business, that is the mark print and codology. The mark print and codology essentially are advanced customizable printing solutions, and codology business does provide end of line automation. End of line automation is basically the production process. The end of the production process, some things can be automated. So providing those solutions, it can do them for you. Those solutions, that's Codology does provide that. And they're gonna start selling products from the international business into India. All right, that's good, that's good. Then this is good, this is new. Increase the size and scale of a track and trace business. What does this mean? This is a new business for them. Track and trace. As the word suggests, we are tracking something, we are tracing something. Basically, track and trace is the monitoring and documenting the journey of a product, of a shipment. Where is the product coming from? Where is it going? All its locations, which warehouse was it in, which truck is it in. So tracking a product. Providing these solutions is the track and trace business, which is it entering into. Okay, Control Print is entering into this business. So let's read. QRES codes. Okay, QRES codes, a track and trace solutions brand, offers comprehensive cloud-based solutions to enhance supply chain visibility and product authenticity. Okay, product authenticity and product visibility. Visibility, you can see the product. If you're a producer, you can see the product. You can see your product going through the entire supply chain. You can see your product being distributed. And product authenticity. Of course, if you can track and trace the products, you will know if the product is really your product because you know the locations and all. Then the second business they're entering into, and this is again very important for the future growth, is entering and increasing a presence in the packaging business. And the name is V Shapes. I believe that's a brand name, could be a product name. But basically, specialty packaging. They are trying to enter into the specialty packaging business. All right. This is the V Shapes. So, two new things. What are the two new growth potentials you can see? There are two new businesses, track and trace, and second is packaging. Track and trace is more like cloud based, okay, selling services, selling solutions, selling software. Software is the thing here. Now, looking at the growth, we first come to the QR based track and trace solutions. To meet regulatory requirements, prevent counterfeiting, data analysis, and customer engagement, okay, the company provides equipment, materials, and co-packing and other associated services so that all the customer requirements are met. We believe that track and trace solutions is the future of coding and marking for traceability, counterfeiting, regulatory requirement, and customer engagement. Okay, so they provide the equipment, they provide the materials, they even provide the co-packing, other associated services. All right, all right, all right. Hmm. This is a new complementary business, most likely. Then comes the track and trace solutions. Okay, track and trace solutions. Here you can see it's written in-house hardware, in-house consumers, in-house software. They're selling their own software made by them, their own hardware, and provides real-time inventory management. Okay, here's the entire thing. Full stack, end-to-end traceability platform. See, the entire supply chain is visible. Where is it going? How is it produced? All that is visible. That's the thing they're playing at. And finally, the next big thing is packaging. Okay, V-shapes packaging. So one was the international business, marking codology, which is basically printing solutions, more advanced, more customizable. Then we discuss the track and trace solutions, all right? And then we have the packaging V-shapes. Now, state of the art packaging equipment for single dose sachets. This single dose sachets is an incredibly important thing for this. Single dose, single use packaging. All right. Okay. Here, they provide the materials, they provide the equipment, they provide co-packaging solutions, they provide the materials. V-shaped packaging. Okay. V-shaped packaging is an important new business for them. And here they can say they can do precision filling within 0.5% depending on the type of product. So precision of the packaging can be 0.5%. Within 0.5%. Variation will only be there. So we looked at all these things, okay? But they can be a bit confusing. These terms, and all we may not know these terms, and we may not know how these translate to the numbers, the business numbers. So look into that. We're going to take a look at what was said by management itself. What does management say? How do they classify the numbers? How much money is being brought in by each of these new businesses, and what is the growth potential there? So now here we have the con call. All right. Now this is the control prints, all right? Control prints post earnings conference call for fiscal year 2026, the quarter one. Here we have the chief financial officer and the joint managing director of control prints themselves. They're going to be answering some questions by shareholders, and we're going to see what they declared about the business. So first here, he says, okay, he says the management, this is said by management itself. Higher expenses that we incurred in the packaging business, that so we are still making a loss in that business, a significant loss. And that's why there's a total loss abroad in CP Italy, which is where we are doing a lot of our packaging business. So right now, the packaging business, the V-shaped packaging, their big growth potential is currently not making money, it's not profitable. And CP Italy is a subsidiary of them. Again, a subsidiary located in Italy that is doing the packaging. The packaging business is CP Italy, and that's why the packaging business is currently in losses. Currently in losses, not profitable. Then he mentions this. I think the track and trace business is doing better, and I would like to say that this year should be break even, if not profitable. That's growing. As the volumes are scaling up, we're seeing, like, obviously, because there's a fixed cost that's there. So as volume scales up and we get more repeat revenue in terms of contracts, AMCs and stuff like that, the profitability of the business is increasing. So track and trace is also not profitable right now, but is doing better and is expected, or he hopes is expected to break even or make profit this year. This year, okay? Now, how? Again, fixed costs. He mentions fixed costs. So the establishing of the business itself, there are a lot of front costs associated. and the running of the business will have lesser and lesser, fewer costs. So the money they will make, it will go directly more into profits instead of more costs, as the majority of costs were involved in establishing the business itself, the massive fixed costs. Volumes are scaling up, so they're getting more volumes, more customers, okay, more products, and that's a good thing. That's a very, very good thing. Then we move on. All right, now this is thing. This company has mentioned that V packaging. V packaging is a very important business for them. So a question is asked by the shareholder that my question was essentially about the comparative pressure that you're seeing in the mono dose packaging business and V shapes. All right. This growth potential for them, V shapes, what's the competition in this? The mono dose packaging. Now he says there's no comparative pressure because as a patent technology, this V shapes, this mono dose packaging is a patented technology. They have a patent for this. So we are competing against different technologies. Some people might use like sachets because they probably will be the biggest. I think use of single use packaging. Okay, single use packaging is the thing. Thermoform is another thing. So when you get into a jams and those things or your Amul and you peel off the top, there's like a thermoform. Okay. Of course, some people use single-use glass bottles or tubes for expensive types of packaging. So, of course, in the pharmaceutical sector, there's some specialty type packaging also which are single-use. So there's no apples to apples comparisons, but there's apples to orange comparisons. Mainly, the single-use packaging, the specialty single-use packaging has a lot of industries it can work in. All right. He says 95% of the market doesn't know what packaging is there. That this packaging is there, this V shapes monodose packaging. 95% of the market doesn't even know it exists. So biggest in India where control print is present. If I look at the world, I think like 99.6% of the world doesn't even know that there's a packaging like theirs. The monodose packaging is even available. It even exists. So first target is to improve our marketing, improve our reach so that more people are aware. Moving down. Now, no numbers. Now, more numbers. The actual loss in the packaging business was in abroad. The packaging business abroad was in the region of 4 to 5 crores. So we are expecting that in this year, by quarter 3, quarter 4, we will be at break even, maybe for that packaging business, and we are targeting a loss of less than 10 crores over the business. Now, earlier in the video, you remember that the operating margin fell to 19%, usually in the 24-25%, but now 19% because the company is investing a lot of money for future growth. These are future long-term investments, basically. Now, we discussed earlier the tracking and trace business. It's expected to be break even or profitable this year. And by quarter 3 or quarter 4 of this year, they expect the packaging business to be break even. These are targets set by the company. And if you're interested, you should, I guess, take these targets, note these statements down, and see that if by quarter 3, quarter 4, they actually achieve it or not to assess the capability of management. So this year, they're targeting a loss of less than 10 crores for the year for the packaging business, targeting a loss of less than 10 years. And by quarter 3, quarter 4, break even. This quarter was 4 to 5 crores loss in this business. Yeah, yeah. Then moving on, we have this. Again, management mentions track and trace should be break even this year or be profitable. And I think that definitely next year, the packaging business should be profitable, although it's going to take a longer time because we want to continue investing. Track and trace profitable this year or break even this year. Okay. Packaging business, 10 crore loss or less than 10 crore loss this year and profitable next year. So if it works out, if all these losses are gone, then their margins will improve drastically. Okay, control print's profits and margins will both grow drastically without these extra losses. Then. Now this is important. These are revenue splits and all. Okay. Now the Codology Group. Okay, Codology Group selling end-of-line automation systems. This is the UK subsidiary. Okay, Codology Group. The total group turnover was 283,000 pounds. UK pounds. Yeah, 283,000 UK pounds. I think that is the pound or is that the euro? Hold up. Pounds, symbol, currency. Uh, yes, that is exactly the pounds. Yep, that is pounds. Okay, 1 pound is 100 rupees, so you can multiply this figure by 100. So Codeology Group, the UK business, the specialized, customizable, basically advanced printing solutions. Turnover was 283,000 pounds and a small profit of 13,000 pounds in the Codeology business. So a less than 5% net profit margin in the Codeology business. Now Mark Print, which is I believe there again it's in Europe, it's an international thing. I don't know the exact location of the country. The revenue for Markprint in quarter one, this is quarter one figures, is 413,000 euros. Okay, euros. So quarter one, Podology was 283,000 pounds. Quarter one, Markprint was 413,000 euros and a profit of 20% on net profit level. So 20% net profit margins for Markprint and less than 5% for Codology. Codology, okay? 20% margins for Markprint. And in CP Italy, okay, CP Italy, that's the packaging business, loss of 384,000 euros in quarter one. So you can take these numbers and you can multiply them by the appropriate currency. Then. Now here's a good thing. Now here's the thing. The V-Shapes part, okay, the V-Shapes packaging business, there are two sub-businesses inside this packaging business. One is selling the machines and one is selling material. One is selling machines, one is selling material. And management said they're making a profit in both. They're profitable in this V-shaped packaging business when they sell the machines, it will conduct the packaging and send the materials like inks and all. Materials as in other raw materials, like the material itself or material packaging itself, like cardboard and all. They're selling that, they're making a profit in both. The profit is higher in the machines in this business. So net profit margins is more in selling machines than it is selling material. It is selling material for the packaging business, which is as I've said again, looking at it as one of the major growth potentials, future growth potentials. And finally, I think we have this one more thing to mention. This revenue split, the revenues mix, okay, in terms of printers, consumables, and services part. So for quarter one fiscal year 2025 2026, 11% of revenue came from selling printers. 62% came from selling consumables like ink. 12% came from spares, selling spare parts. I think extra parts, something went wrong. So this gave an extra part for the printer. And services, 14% of revenue came from services. And for fiscal year 2024, 2025, last year, 14% revenue came from printers, 66% came from consumables, 7% from spares, and 13% from services like operation, maintenance, repair services. So, major part of revenue comes from consumables, and that was it. That was the entire Control Prints business analysis. Major money comes from India, of course. The new things are track and trace, repackaging, and international business coding and mark print, which essentially provides more advanced custom printing solutions. So that's it. Hope you like Control Print.